Trading the opening range breakout, ORB, to net $100 daily requires a disciplined marriage of mathematical probability and precise execution. If you are risking a fixed amount per trade, the goal is to find the sweet spot where your win rate and R multiple, reward-to-risk ratio, consistently clear the $100 hurdle after commissions. Here is a technical breakdown of how to structure this strategy. 1. The mathematical blueprint. To average 100 per day, your positive expectancy must account for losing days. IFU risk *100 to make $200, a 2R trade. You only need a 40% win rate to stay profitable. Metric. Target value. Daily goal, $100. Net. Risk per trade, 1R. $100 to $150. Profit target, 2R. $200 to $300. Stop loss. Usually the highest low of the opening candle, or a VWAP cross. 2. Technical execution, the setup. Focus on the 5-minute or 15-minute opening range. The goal is to capture the volatility expansion that happens when the smart money positions itself in the first 30 minutes of the New York session. The filter. Only trade stocks with a relative volume, RVOL, greater than 2.0. You need enough fuel to push the price through the range boundary. The entry. Buy a break of the opening range high, ORH, or a shorter break of the opening range low, ORL. The confirmation. Look for a bull flag or bear flag just outside the range boundary on a lower time frame, like the 2-minute, to refine your entry and tighten the stop. 3. Confluence checklist. To increase the probability of hitting your $100 goal quickly, look for these 3 alignment factors. VWAP alignment. Only go long if the price is above the volume-weighted average price, VWAP. Only go short if it is below. Daily level breakout. The ORB is significantly more powerful if it coincides with a break of yesterday's high or a major daily resistance level. Sector strength. If you are trading a tech stock, ensure the NASDAQ $QQQ is also moving in your direction. 4. Risk management rules. Trading the open is fast-paced. To protect your capital, adhere to these hard rules. 1. The max loss rule. If you lose 2R, 200 minus 300 in a single morning, shut down the platform. This prevents revenge trading from turning a bad day into a catastrophic week. 2. Trail to break even. Once the trade reaches 1R, $100 profit, move your stop loss to the entry price. This ensures that a winning trade never turns into a losing one. 3. Time decay. If the stock hasn't hit your target within 30 to 45 minutes of entry, the opening momentum has likely faded. Consider closing the position or tightening the stop significantly. 5. Sample trade logic. Scenario. Stock XYZ breaks the 5-minute ORH at $150. Stop loss, $149.50. Bottom of the candle, 50 cents risk. Position size, 200 shares. Total risk equals $100. Target, $151. 2R profit equals $200. Even if you lose tomorrow, this one trade covers your $100 per day average. Adding a VWAP slope filter is a professional way to ensure you aren't just buying a price break, but riding a strong trend with institutional backing. A steepening slope confirms that the average price paid is rising or falling rapidly, which provides the wind at your back needed for a quick scalp. Here is how to integrate VWAP slope into your opening range breakout, ORB, logic. 1. Defining the slope logic. To quantify the slope, you look at the rate of change over a specific period, typically the last 3 to 5 candles. For longs, the ascending slope. The VWAP must not only be below the price but must be curving upward. This indicates that buyers are aggressively paying higher prices as the volume increases. For shorts, the descending slope, the VWAP must be curving downward, showing that sellers are hitting the bid with increasing intensity. 2. Implementation in ThinkScript. If you are using ThinkScript to automate these filters or color code your charts, you can use the linear regression slope function or a simple diff calculation. Plot I strong long equals slope greater than 0.05. Hash adjust threshold based on the asset's ATR. Plot is strong short equals slope less than minus 0.05. 3. The modified entry checklist. With this added filter, your go signal for a $100 per day target becomes much tighter. The long setup. ORB plus rising slope. 1. Price action. 5-minute candle closes above the opening range high. 2. VWAP location. Price is greater than VWAP. 3. Slope filter. VWAP is visibly trending upward, e.g., a 30 degrees to 45 degrees angle. Why? If VWAP is flat, the stock is likely in a chop zone, and the breakout is more likely to fail. The short setup. ORB plus falling slope. 1. Price action. 5-minute candle closes below the opening range low. 2. VWAP location. Price is less than VWAP. 3. Slope filter. VWAP is rolling over and heading downward. Why? A falling VWAP slope indicates that even the average price is dropping, confirming heavy distribution. 4. Trade management advantage. Using the slope helps you avoid the fake out, the trap. Price breaks the ORH, but VWAP stays flat or points down. This suggests the move is low volume or exhaustion buying. Do not enter. The trend. Price breaks the ORH and the VWAP slope hooks upward simultaneously. This is a high conviction signal where you can safely aim for a 2R or 3R target. 5. Tactical adjustment. Since you are targeting a consistent $100 daily, consider this. The steeper the slope, the tighter your stop can be. If the VWAP slope is high, the stock should move in your favor almost immediately. If it stalls and the slope flattens, that is your signal to exit early with a small profit or a scratch trade. Adding the SPY, ORQQQ, as a secondary slope filter introduces a market tide layer to your strategy. This ensures that you aren't just trading a strong stock, but a strong stock that has the entire weight of the market pushing it in the same direction. In technical terms, this is relative strength, RS, combined with market correlation. 1. The multi-step correlation logic. For a $100 per day goal, you want to minimize friction. Trading against the market trend is friction. By adding the SPY slope, your logic follows this hierarchy. Market direction. Is the SPY VWAP slope positive? The tide is coming in. Stock correlation. Is your specific stock's VWAP slope also positive? The boat is moving with the tide. Relative strength. Is your stock's slope steeper than the SPY's? The boat has a faster motor than the tide. 2. ThinkScript correlation logic. To pull the SPY's VWAP slope onto a different stock's chart, you use the close SPY or VWAP SPY reference. Here is a conceptual way to code that double green signal. Reference the current stock. Def stock VWAP equals VWAP. Def stock slope equals stock VWAP, stock VWAP. 3. The high conviction signal. Plot strong long equals SPY slope greater than 0, and stock slope greater than 0, and stock slope greater than SPY slope. Strong long set painting strategy. Painting strategy. Boolean _arrow _EP. 3. Interpreting the slopes for entry. When you align these two, you are looking for confluence. Signal type. SPY VWAP slope. Stock VWAP slope. Action. High conviction long, positive, steep, positive, steep, aggressive entry. Aim for 2R or 3R. Divergent long, negative, positive, caution. Stock is strong, but the market might drag it down. Small size. High conviction short, negative steep, Negative steep. Aggressive short. Aim for 2R or 3R. Low quality. Flat. Flat. No trade market is in chop mode. 4. Refining the strength factor. To truly hit that $100 per day consistently, use the SPY slope as a filter, not just an indicator. The V recovery. If the SPY has a sharp negative slope at the open but then hooks and the slope turns positive, wait for that hook before taking your ORB long. This prevents you from getting caught in a morning fade. The lead lag effect. If the SPY slope starts flattening out while your stock slope is still increasing, it's a sign of relative strength. This is often the best time to hold a winner for a larger R multiple, as the stock is ignoring market weakness. 5. Risk adjustment based on correlation, full alignment. When both slopes are steep and moving together, you can risk your full $100, 1R, on the trade. Partial alignment. If the SPY slope is neutral/flat but the stock breaks the opening range, consider cutting your risk to $50, 0.5R. This mathematical adjustment keeps your equity curve smoother by only betting big when the market and the stock are in total harmony.